All right, let's talk about a quiet revolution that's happening right now inside your digital wallet. We're going to dig into the very plumbing of how money moves and ask a pretty big question. Is the system that's powered our economy for the last 50 years about to become a thing of the past? Let's get into it. You know the feeling, right? You get that ping, that notification that says payment sent. But when you check your account, nothing. For days. In a world where you can get anything else instantly, why does our money still travel like it's on a horse-drawn carriage? Well, it's a huge frustration for pretty much everyone. And for businesses, it's a real problem. Nearly half of them say that if they could just get paid faster, it would cut their costs and make everything more efficient. The reason for the delay? Well, it lies in a hidden world we almost never think about. You see, every single time you send or receive money, it's traveling on a set of invisible highways. We call these payment rails. They are the systems, the rules, and the technology that make up the backbone of our financial system. And for decades, one particular set of rails has been doing all the heavy lifting. So to really get a grip on where we're headed, we first have to understand where we've been. Let's take a quick look at the system that we've all grown up with, the one that took us from paper checks into the digital age. The whole journey has been, a pretty slow evolution. We went from these clunky, manual, paper-based systems, think checks, to what we now call electronic funds transfers, or EFTs. And that was a massive leap forward in efficiency. It really paved the way for the digital workhorse that has dominated the U.S. financial system for 50 years. Okay, so let's talk about the unsung hero of your finances, the system that's been quietly working behind the scenes for half a century, the automated clearinghouse, or, as you probably know it, ACH. Ever since the 1970s, ACH has been the absolute bedrock for all those high-volume, super important payments. That direct deposit from your job? Yep, that's ACH. The automatic payment for your car or your utility bill? That's ACH too. It's a rock-solid, incredibly reliable system that handles something like 37 million transactions a day. But it was designed for a totally different time, with one key feature that explains why it's so slow. And here is the key to the whole thing. ACH uses a system called batch processing. The best way to think about it is like a mail truck. It doesn't just zoom off the second you drop a letter in the mailbox, right? It waits, it collects all the mail, and then it leaves on a set schedule. Well, ACH does the exact same thing with our money. It processes transactions in these big groups a few times a day and, get this, only during business hours. And that's why your transfer on a Friday afternoon often doesn't actually land in your account until Tuesday morning. But now the game is completely changing. There's a new generation of payment rails, and these were built from the ground up for our 24/7, always-on world. We're not just talking about an upgrade here, this is a total redesign of how money moves. Here in the US, there are two major players leading this charge. The first one to show up was the RTP network back in 2017. That's a private system launched by the Clearinghouse, which is actually owned by a group of the country's largest banks. And then more recently, in July 2023, the US Federal Reserve launched its own public system, FedNow. Now, even though they're separate, they are both designed to do one thing and one thing only: make payments truly instant. So the huge technological leap forward is the move away from that batch processing we just talked about. FedNow and RTP use something called real-time gross settlement. What that means is every single transaction is processed one by one, individually, the very second it's sent. There's no waiting for the mail truck to fill up. The payment just goes in seconds, 24 hours a day, 365 days a year. Okay, so we've got the established veteran, AC, and now we have these new lightning-fast challengers. Let's put them head-to-head and see how they really stack up against each other. I mean, this table really lays out just how fundamental the differences are. Speed and availability, yeah, those are the obvious ones. But look at those bottom two rows. Unlike ACH, which lets companies both push money to you and pull money from your account, these new systems are currently credit push only. That means you can only send money. And this next one is absolutely crucial. Instant payments are irrevocable. Once you send it, it is gone. There's no calling the bank to reverse it like you often can with an ACH payment. Now, all those operational details are super important, but for a lot of people, and especially businesses, the most practical difference is a really simple one. Just how much money can you actually send at one time? And these limits, well, they tell you everything you need to know about what these systems were built for. ACH, which was designed for massive corporate payments like payroll for a huge company, has a standard limit of a mind-boggling $100 million. By contrast, the new instant networks have lower, though
let's be honest, still pretty substantial caps. The RTP network has a limit of $1 million per transaction.
And FedNow's is currently set at 500,000. So this really positions the new guys for those urgent, high-value payments, while good old ACH remains the go-to tool for moving some seriously large amounts of capital.
So the big question is, with all this incredible speed and 24/7 availability, are FedNow and RTP just going to make ACH obsolete? Is this old digital workhorse finally headed for retirement? Well, pretty much all the analysis says, nope, not at all.
A fully instant future actually has some pretty big hurdles to clear. First off, the two new networks, FedNow and RTP, they don't talk to each other. So a bank that's only on FedNow can't send an instant payment to a bank that's only on RTP. Second, instant payments cost more. The network fee for a single FedNow payment is over 10 times that of an ACH payment. Then there are new fraud concerns. Since you can't reverse a fraudulent payment, it creates new risks. And finally, for those massive, non-urgent bulk payments like payroll, ACH is still just the most efficient and cheapest tool for the job. And that really brings us to the main takeaway here. The future of payments isn't about one system replacing another. It's about having a choice. We're moving to what the experts are calling a multi-rail system. Think of it like a train station. Different journeys require different tracks. For those urgent, gotta get it there now payments, you'll use the instant rails. But for those predictable, high-volume transfers, the good old reliable ACH rails are still going to be the best choice. So the real revolution isn't just about speed. It's about the fact that, for the very first time, we and our banks have a real, meaningful choice. The infrastructure is finally in place to decide if your money needs to arrive in 3 days or if it needs to get there in the next 3 seconds. This is not financial advice.